All right, this is it. It's Phil C here with you for another edition of the Star Trading Overview. Now, if you've been following me lately, you'll know that today is a very special day. This is a special episode. Before I share why, firstly, I want to thank about over 50 people so far for signing up for the Star Classroom and taking advantage of the free training available. And the feedback I've received thus far is incredibly heartwarming. So, there's quite a few of you, so I want to say to all of you right now, from my heart of hearts, truly thank you for that. What I've been getting ready for you is an upgraded suite called Star Trader 2.0. Now, it has everything Classroom has, but a ton more. So everything I do here with the Star Trading Overview, which is identifying the profitable trades, which we'll get to in a moment, and then getting involved in the trades to make profits that have a proven edge in the markets, is exactly what you'll learn inside the members area. Because at the end of the day, your results are the only thing that matters. What I'm launching right now with this episode is Star Trader 2.0. It's a Star Live trading room with live interaction for questions and answers, and to see behind the scenes of what day trading actually looks like. Things that a lot of so-called trading gurus don't want you to see, because then you won't buy their stuff. Right? Transparency and proof of concept is key, especially when it comes to getting you results that are going to be profitable for yourself. And my favorite, taking everything I have available for you, going out and testing it yourself, and knowing that with your own eyes that it actually works. So when you are profitable with it, you'll say nice things about me and maybe like and subscribe to my channel, which is incredibly heartwarming. That said, if you like my style of trading and want to see the Star Trading Overview done on a daily basis, every London market open, head on down to the link in the description and get involved with the 2.0 upgrade for free, which I'm super excited about. And I'm sure that you will love a specific section in there called Where the Profits Are Hiding. So be sure to sign up and check that out. So let's take a look at what's happened and happening in the markets right now. I appreciate you always. So let's go. All right, traders. So here we are at the charts. First, before I get into a couple of trade setups on my portfolio, I want to recap what we've been following. I think not last week, but the week prior. We were looking at the Bitcoin chart, and I was explaining that structure is prevalent on any time frame in any market. And I used Bitcoin and Ethereum. I went over those charts to display that to you. Excuse me. And I wanted to go over this because it's important to show that with the trend continuation trade, the one that I personally favor a lot, it can be used wherever you want to trade, right? You can learn that, pick it up and use it. So we came up on the Bitcoin here. We came up and we closed above this high looking left. And then we came all the way back down. Now keep in mind that prior to this move, we had to move up like this, like that. Reason why I want to draw it like that is as soon as you have this move, okay? As soon as you have this move right here, this is what we would call a bullish trend. So as soon as that happens, you want to start looking for trend continuation trades. Where do you want to look for trend continuation trades, right? This is down here because in case price action broke towards the downside, we might get a pullback and then move all the way back down. That's why that circle was there. Now get rid of this too, right? So where would you look for entries? Well, as I said, I think it was a couple of weeks ago, previous resistance right here becomes new support. Again, this is in the training as well. When you go through it, it covers this more in depth. Right, back. Notifications going everywhere. Previous resistance becomes new support, right? This is where you'd be looking for a long opportunity right here because we broke above these highs and then we come all the way back down in the structure, looking left, and then that is where you'd want to buy. Now, where would you want to buy? Again, structure, look left. Structure leaves clues all the time. Right up here, this is where you'd want to take off your position. So as price action moves to the high side, again on Bitcoin daily time frame here, as we move to the high side, you'd want to take off half of your positions there, okay? Again, if you're trading two targets, like we always do here. And then your follow-on targets, where would that be? Let's quickly do it before we go through my portfolio here. Fibonacci extension tool. So valid trend continuation trade. We came back down in a structure. Called this a couple of weeks ago. Where are target twos? After target one is obtained, we're looking for an extended move. So it makes sense that we use a Fibonacci extension tool. So we go from swing low to swing high and back down in, right? So right up here at the 127, this is where your target twos would be. Right here. So if I copy and paste that, oops, alone, I want to do that. Target ones are down here, okay? A retest of the highs right there. And then you take off half of your position and then roll stops to break even. And then you look for that follow-on target up at the 127. So again, in a perfect world for anyone who is involved in this or trading or whatever, with Bitcoin, that is where I'd be looking for those targets on that pair. So let's go to the euro dollar. I just wanted to update you on that analysis, right? So on the euro dollar, we've been tracking this pair for a while. And during my day trading video that I released 4 days ago, we got our entry on the 4-hour time frame. So we finally, as we jump down here, 4-hour time frame, we finally got our entries here because we missed it. If you look at last week's video, we're looking at this pair, we're tracking price action, and we were too late for the entry, right? Our entry is right up here at the 886. But then price action came all the way back down. So when we identified this trade, we were trading around this level right here. So we can't enter the trade. So the only thing that we could do is wait for a second chance entry. So if price action doesn't touch the target one here, then it's still a valid trade. Yes? With me? Right. It's still a valid trade. So if price action comes all the way back up into the 886, it's still a valid sell. And that's what we did. On the 4-hour time frame, we were watching this pair. Whoops, I got rid of targets right there. Right. We were tracking this pair. Price action did come up into the 886, as you can already see right there. Let's just put this back. Sorry. Let's do this. Sorry about that. Right back up into 32. Yeah. Okay, so price action came all the way up, and then we had to roll fibs like this. And then we had to adjust our targets like this, right? So target 1 would be right here. And then target 2, we have to roll our targets like this. Okay? Because when you're trading patterns and price action pushes up, you have to drag the Fibonacci. So say it was down here. Have to drag it all the way up to the highs right here. That way you're still measuring. Because if pattern trades are based on ratios, then you have to take your Fibonacci and then always roll with price action to the highest high or lowest low, depending on the buy or sell. And then adjust targets accordingly. Because again, with patterns, we're using ratios. So we have to adjust targets with 382 and 618, as we do right here. Okay. Euro yen. Yeah, so we take off half of the position, excuse me, and then roll stops to break even. Sorry. We take off half of the contract, we roll stops to break even, and then, you know, with any luck, we might get a follow-on target down at the 618 right there. Okay. Euro yen, not much to do here. We were still waiting for a pullback on this, and yeah, I got caught in my home run trade on this one. It got taken away from me. Didn't quite get what I wanted. However, on a lower time frame, on the 4-hour time frame, there's it. Yeah, I lost about 23, I think it was. 23 pips or so on that, trying to go for that home run. I think it was over an 8-to-1 risk to reward. So definitely something that I'll be looking for. So I'll jump down on the 4-hour because it's another textbook example of a trend continuation trade, right? So we're bullish. And we came up, price action comes up, and we close above these highs, right? So with the trend continuation trade, your entries would be at a previous resistance, new support, like this, right? Right there. So here it is. Price action comes up. We pull back down into previous resistance, becomes new support. This is where your entry would be, okay? So you'd enter at this structure level, like this. Your stops would be below the swing low. Okay, right below the swing low, because if price action moves down past this level, you'd want to be out of the trade because potentially moving to the downside. So entry would be here at structure. Stops would be below the swing low there. And then your targets would be right where it is. So 1-to-1 right there. It's just a good example of a trend continuation trade. I like to show these. They're very simple, straightforward to do. Anyone can pick this up, learn it, and trade it. That's what I love about the trend trade. Follow-on targets, right? Extension tool, swing low to swing high, back down in. Let's clone this. For those of you who want to follow that trade, you'd roll up on into 127 Fibonacci extensions for follow-on targets. So it looks something like that if you're in it, right? But yeah, that's what that is there. Okay. So pound dollar right here, been following the actually. Come back to pound and dollar in a second. A pound yen, though still waiting for a pullback on this one. However, we did get quite a few pips out of this one before we broke into new highs right there. Still bullish. We close above the highs, so we get tiniest pullback, and then still looking for new highs right there. Yeah, I was looking for a pullback back down into the structure level for an opportunity to get long, but yeah, we don't get that. Right. Just really quickly, I want to go over the Aussie dollar here before I get into two potential trade setups that I've got. Right. So as you can see, we've hit our stop placement. And as mentioned last week, we expect a pullback, right? Back down into where? This area. And as we get right here, what do you do from here, right? As I said, we came up, we hit our stop. We want to get out of the position. As we come back down, there's a couple of things that can happen from here. We had a close below, right? And then we have a move up and we have a close above. So consolidating here, what you would want to wait for on this pair right now, right? So I got a little stung on the Aussie dollar actually, right there. So we'll clean this up. Okay. Yeah, so we're going to close below and a close above, right? So consolidating, moving towards the right side. Price action comes up, and then we come all the way back down. So from here, a couple of things can happen. If right now you do nothing, you be patient. There's no criteria that's met in order to take a trade on the Aussie dollar. What you do is you wait for that move towards the upside. Remember, you're waiting for this pattern right there. As soon as you get this, that's a valid entry for a bullish trend, a potential entry for a bullish trend. Right now, we're in a bullish rotation here. So we can't buy it up. We can't do anything right at the moment because price action hasn't proved that it intends to go higher. That meets my rules. Okay. Always talking about my rules. Yeah, I got to trade with my rules, and that's how I identify trend right there. So if I get a higher close above this previous high, then I'll wait for a pullback back down into this level, and then I look for long opportunities right there. That's what I'm waiting for. The other thing that can happen is we can push up, fail to retest, right? Or fail to make new highs. And then we might get a move back down, potentially giving us another pattern entry on this. Now that's, way away. But I wanted to point out that right now, you do nothing. You be patient until price action tells you what to do. In other words, tells you what to trade. Okay. So over on the Aussie yen right here, there's nothing to do. Already on the daily. Squash it up like this. Over on the Aussie yen, there's nothing to do. So we have an entry in here, right? Price action comes all the way halfway right now, and we're trading up at around 95, 900s, let's say. So with this one, there's nothing to do either. We're involved, and we wait, and we be patient with that. Kiwi dollar, we are still waiting. So for this one as well, this is the other potential trade opportunity. What I need from price action is to push all the way back up into this box right here. So that would be my sell zone. Then I'm looking for targets into the 382 for target 1 and 618 for target 2. So back over on the pound dollar before this video gets too long, right? The opportunity I want to look at is over on the 4-hour time frame. Actually, you don't need any of this analysis anymore. So let's go over it. Price action, moving up, we have a pullback, right? We move up, we have a pullback. Then we have another move up, and then we have another pullback. Okay. So what are we doing, guys? Yeah, we're trending, right? Price action moves up, and then we close above this high right here. And as you can see, we come all the way back down. Right down here. So again, this would be a valid move for a what? Previous resistance, new support right there. Price action puts in one of these numbers. Boom. Retest the high, right? It's another little trend continuation trade in there as well. Now, I consider the move already done, okay? We came down, we hit structure, and then we've popped all the way back up and retest these highs. So I consider that move complete on a trend basis. However, let's take a look now. Remove drawing tools. Let's take a look at a potential trade opportunity in the form of Fibonacci swing low to swing high. We come down and we hit the 618, and then we come all the way up, retesting these highs, and we don't push above these highs right here. So this is a potential trade opportunity for us to get involved in. So here's our structure level right down here. Where's my line tool? Like this. No. Where is it? Why is it not? Oh, there it is. Okay. I got the right tool. Right. Bear with me. Okay. So we're looking at this level right down here. Okay. And our entries for this potential Gartley. So here's the trade setup. Fibonacci extension. Swing low to swing high. I mean, swing high to swing low. Back up in. Like this. Okay. Price action. Comes all the way up. We come all the way back down, giving us a 618. Okay, this is a B point retracement. And then we come all the way up, giving us a C point retracement. And then we've come all the way back down. Now, if price action moves down into the 127 Fibonacci extension, then I'm looking at a buying opportunity, right? This is a potential Gartley pattern. This is M formation. Really good pattern trade, right? So here it is. Triangle tool. We have our X to A to B, B to C, right there, and C to D. If price action can move all the way down into 127, so that would be 26 540s, right? 26 540s would be my entry. So let's get, let's do this actually. So let's get our entries here at our potential buy zone right here. Anywhere between this level here and this swing low, and this is our potential buy, right? All we need is price action to drop a little bit lower, then we have a valid Gartley pattern here. If I grab my long tool, dealer thingy, this is where our stops and targets are going to go. Fibonacci retracement, so we'll go from swing high, full leg of the move, down into swing low, okay? So entries right here at 26 480s, 490s, right there. Yeah, 26 490s for entries. Then you want your stops below this swing low right here, okay? So we've got our stop placement below our X point looking left, right? Why? The significance of stop placements. If price action moves down to the downside, then I want to be out of the position, because then price action may intend to go lower. If that's the case, then it makes sense. I want to be out of the position, right? So that's why my stop placement's there. We have our entries, then we have our stops right here. Then we have our targets, okay? Where are targets? 382 Fibonacci retracement. So targets would be at 127 1/8, let's say. It's right there. 127 1/8, okay? So then we have over a 1-to-1 risk to reward. Now keep in mind, Gartley pattern is around 50 to 60% accurate. So if you do the maths on this strategy, if you're around 50 to 60% accurate on a Gartley pattern, okay, and you have a risk to reward that's over 1-to-1 on target 1, and then we clone this and go for target 2, right? Right up into the 618, which would be 127 660s, let's say. 127 660s for target 2. If you write half the time on this, okay, and you have a risk to reward like this, and just over 1-to-1 on target 1, and we got a 2-to-1 on target 2, then you have a mathematical proven probability that you're going to gain more than you lose over time trading this. That's what that means. See, trading doesn't have to be overcomplicated. All it takes is learning a strategy, picking one strategy, one time frame, one pair, and testing that strategy. Then what you will find is, hey, over time, if I take this trade, I'm going to be profitable. Now you know that you have a positive expectancy based on that which you've tested. So then when you come to the live markets and you begin trading that, all that's required of you is to show up every single day and execute that same thing day in and day out. Again, now you have an edge. You have a positive expectancy, a mathematical proven probability that you gain more than you lose over time. So trading doesn't have to be overcomplicated. We keep it simple. That's what we want to do. One strategy, one time frame, one pair, and then trade it over and over and over again. And as you get consistent with that, and as you start making money with that strategy, then you can add on another one. So now you're in a really good and healthy position. You're making money on one strategy, and now you're testing another strategy to add to that while you're making money. And you keep repeating that process. And then after a while, you'll have a good portfolio with a few different strategies. And now you're day trading every single day, and you're a consistent, profitable trader. That's it. Don't have to overcomplicate it. It can be very straightforward if you follow those steps. And that's exactly what we're going to do in the Start Trader 2.0. So if you haven't yet, and you love this style of trading, and you agree with what I say, you say, right, that sounds good, that's great, I want to do it. Then I'll leave a link in the description. Jump on in, reach out to me if you need anything, and we will get you where you not only need to be, but where you deserve to be. All right? But that's it for this episode of S.T.O. Again, thank you so much. I'm grateful for everyone and spending time with me. I'm really appreciative of that. Please subscribe, like the video. It will help me reach out more people and fulfill my passion of being here with you every single week. Until next time, well, when you do sign up, I will see you in the live room starting on Tuesday, London Market Open. So I'm excited to see you there, all the star traders in the community. If not, I will see you next time. Be safe, enjoy life, and I'll talk to you soon. All right, thank you so much.